Welcome back to the Chronology of Wealth. We track patterns, not predictions. And today, we're unlocking the financial cycle's most consequential secret, a repeated, mechanical trade sequence that has marked the absolute top of the market before every major crash for the last century. This isn't about luck. This is about chronology. In 1929, Joseph Kennedy executed this sequence. In 1987, Paul Tudor Jones did the same. In 2008, it was Michael Burry and John Paulson. They didn't just survive the collapse. They monetized it. And today, in 2025, the smart money buffet, Dalio, Ackman are executing the exact same three trades. Why does this pattern repeat? Because financial collapses follow a predictable chronology: extreme valuation, right row dollar, excessive leverage dollar, right row dollar. The trigger dollar, right row dollar, forced liquidation dollar, right row dollar, panic. The three trades are the perfect counter strategy to this five-stage collapse sequence. Let's break down the chronology of protection, preservation, and profit. Phase 1. The chronology of protection. The first signal in the chronology of wealth is the recognition that the risk has fundamentally changed. The smart money is not concerned with missing the last few percentage points of the rally. They are focused on capital preservation. This trade happens 12 to 18 months before the crash. 1929. Joseph Kennedy, the ultimate speculator, saw the danger of record-high margin debt. He systematically converted his stock pools to cash throughout the summer, getting out just weeks before the September peak. He secured his capital, while everyone else was celebrating the roaring 20s. 2008. Warren Buffett couldn't find anything attractively priced. That's the oldest tale in the book. His cash pile at Berkshire grew to over $60 billion. He had his dry powder ready long before the Lehman moment, the 2025 signal. The evidence is overwhelming. Warren Buffett is sitting on $325 billion in cash. That's a record by every measure. He's been selling Apple, selling banks. Insider selling across Silicon Valley and Wall Street is at 2007 levels. Question for our viewers: when the people who run the companies are selling their own stock, what are they seeing that the retail investor is missing? Trade 1 is substantially complete. The capital is off the table. Phase 2, the chronology of preservation. Once you're in cash, you face a new risk: currency debasement. When a systemic crisis hits, central banks respond by printing money, trillions of it, to backstop the system. This devalues your cash. Trade to protects the purchasing power of your protected capital. It's the 5,000-year hedge against fiat currency collapse. 1934. Bernard Baruch knew the history. He held gold. When FDR officially devalued the dollar by changing gold's fixed price, Baruch realized an instant 69% gain in dollar terms. Preservation became profit. 2008 to 2011. John Paulson took his mortgage shorting billions and aggressively moved into gold. Understanding that the Federal Reserve's response would be unprecedented money printing, gold surged from $600 to $1,900. The 2025 signal. This is happening on a geopolitical scale. Central banks globally have purchased over 3,000 tons of gold in the last 3 years, a historic record. They are diversifying away from the US dollar standard. Gold is at record high prices. Why? Because the biggest players, from sovereign nations to Ray Dalio, are executing trade to right now. They are hedging against the inevitable response to the coming crash. Trade 2 is escalating. The flight to tangible assets is in full swing. Phase 3, the chronology of profit. This is the ultimate alpha trade. You don't just dodge the bullet. You get paid when the bullet hits the target. This bet is placed 6 to 12 months before maximum panic. This requires instruments that explode in value when fear and volatility spike. 1987, Paul Tudor Jones made his legendary bet on put options on index futures. He paid a relatively small premium for the right to sell the S&P at a high price. On Black Monday, his fund was up 62% for the month because those options paid out 100x the premium. 2008, Michael Burry and John Paulson bought credit, default swaps, CDS, insurance and subprime mortgage bonds. They lost money for years paying the premium, but when the systemic default happened, those insurance contracts paid out billions instantly. The 2025 signal. The bets are being placed on the next weak link, commercial real estate CRE. The cost to insure against defaults on commercial mortgage-backed securities CMBS, CDS, has spiked 300% to 500%. Sophisticated investors are insuring against the collapse of office properties that can't be refinanced. This is the 2008 playbook reborn. Institution sei Blocks van Parkplatz 500. Put options and VIX call options expiring in late 2025 and 2026. They are literally paying millions to hedge against a future spike in volatility. Trade 3 is active. The insurance is being bought right now. The final chronology, trade. The real secret, the final chapter in the chronology of wealth, is the implicit fourth trade, buying at the bottom. You cannot execute trade 4 unless you successfully executed trades 1, 2, and 3 first. When panic is maximum, when the S&P is down 40%, potentially around 3,500. When the headlines scream depression, you deploy the capital you protected and the profits you made. Warren Buffett did this in 2008, injecting billions into Goldman Sachs and GE when fear was absolute. This is the hardest part, having the psychological fortitude to buy when the world feels like it's ending. This is what separates the elite from the masses. The timeline, the 3 trades are active. Based on the historical chronology, we are in the 12 to 18 month window. Expect the trigger and the crash acceleration in late 2025 or early to mid-2026. Most people will ignore this pattern. They will hold believe it. But a small, disciplined audience will recognize the signs. Execute the simplified trades, raise cash, buy gold, buy puts and position themselves for the greatest generational wealth transfer since 2008. The chronology is clear. The time to position is now. Because when the crash arrives, it's already too late.